There's some legislation moving this week in the House. This may be news to some of the members because it's moving fairly quickly. It's H.R. 3845. It's a full-blown reauthorization bill. As reported from the committee, that bill would essentially make many of the lenders in this room ineligible to participate. Does SBA have a position on H.R. 3845?
Well, as you know, there's no, this is quite new movement in this legislation, so there's no official administration position at the moment on this. We're working very closely with the House on a whole number of projects, including this $5 million that was just announced. So we're having exactly those conversations now, and this is the opportunity, I think, for everyone to engage. The good news is there's tremendous activity around small business and small business lending and access to capital. So this is a really actually critical and terrific time for all of us.
And we'll talk about H.R. 3845 in greater detail tomorrow, but this would be a tag-along. Can you comment on the timetable for getting approval for the increase in the 7A and 504 loan caps to $5 million? And then there's a couple other cards that also want to know, does the guaranteed portion go up as well?
Well, in our proposal, in the $5 million, and what the President has advocated for Congress, yes, the guarantee portion, of course, does go up as well. The timetable is that we hope, bills increasing it have dropped, by the way, in the Senate, and there was already, as part of this bill, a partial increase in the House. So we are very hopeful that it will be as soon as possible.
Okay, the other new hot issue, and this is really not a question, but it's FAS 166. If you guys have not followed FAS 166, you'll want to pay attention over the next day and a half. Where's Bill McCoy? Bill, where are you? Bill's back here. He tried beating me up about the head and ears quite some time ago to tell me to pay attention, and he finally got his message through. But effective January 1st, 2010, when we sell our loans, we're going to have to comply with FAS 166, and you're going to learn more about that again over the next day and a half, and everybody needs to pay attention. It looks like it could be as much as a $200 million capital hit to our industry, and we would just like to work with you and your staff over the coming days to come up with a workable solution to get past this. You got time for one more?
Sure, one. Take two more.
Okay. Let's do this one. Is there a plan for expanding the volume provided by the 1,200 new lenders? Do you see challenges with this lending group?
Well, we are very pleased that in the lenders that have come back to us, we see many new faces. We see some community banks and we see credit unions. And we really welcome, I think, a relationship with some of these new organizations. We've had great partners all throughout, big banks and smaller banks, and I think we're going to work very hard to see how we can work well with different banks. Different banks have different needs. If you do big volume with us, or if you do, perhaps less volume with us, and we think we can provide good service to all kinds of different banks in this community. It's going to be one of our key measures going forward. Is going to be points of access. Not just how much volume we roll through, but how many points of access that we have for small businesses to reach out and get access to capital. Last one, huh?
Let's see if I can reword this one just a little bit. Having been to a couple of events where the banking regulators have spoke, their position has been, I'll see if I can remember the quote that I heard from the Texas meeting, where it's time lenders to not take risk, but it's time to build capital and reserves. What can we do in working with the SBA and with the banking regulators to make it just a little bit easier to extend credit to small businesses?
This is a time, I think, that we've all seen what the value is in the SBA programs. because we are here to provide access and opportunity when the market really can't provide that access and opportunity. And you all have described to me what happens with credit elsewhere. If a small business can get credit elsewhere in the marketplace, they shouldn't use the taxpayers' money. But there's a lot of circumstances, especially now, where for a whole variety of reasons, these programs have really worked. They've worked for you, they've worked for us, they've worked for small businesses. And they are here, we are here now, we're going to be here, we hope, well into the future, providing this kind of support with our guarantee programs, with our variety of other support, whether it's counseling, whether it's access to government contracts, so that we can help small businesses get all of the tools they need to grow, to create jobs, and to stabilize and provide a foundation stone for this economy. I really have to tell you how delighted I am to be here. I have to thank Tony and Greg and everyone and tell you how much we appreciate your partnership. Thanks so much.
Thank you, Administrator Mills. I know you got a busy schedule here in Phoenix today, but before you leave the stage, there's one more thing that we would like to do. As you know, this year NAGGL celebrates its 25th year of service to the small business lending industry and to our nation's small businesses. But in addition to celebrating our anniversary, we also celebrate 25 years of outstanding partnership with the U.S. Small Business Administration. And it is a partnership in every sense of the word. During this time, we have had some lean years and we've had some prosperous years. We have seen the creation of a certified lender program that grew into a preferred lender system. We have seen the development of the secondary market, centralized service center, centralized purchase center. We've seen specialty loan programs come and go, and we've seen loan caps, we've seen lender holidays, and now we're seeing a program expansion. When we were founded in 1984, SBA still provided some 7A loans on a direct basis, and SBA staff participated virtually in all servicing and liquidation activities. Over the years, SBA has redesigned and redefined itself to be more efficient and more effective in its delivery of loans and other services to small businesses, with the result being a loan program that now relies completely on commercial lenders to deliver billions of dollars of capital to small businesses each year. NAGGL is very proud of the role that its members play in achieving these critically important results. The path we have traveled together has not always been smooth, but we've always been able to weather storms together. Today we face some serious and unprecedented challenges ahead of us as we work together to help small businesses survive and thrive in these very difficult economic times. But we know that SBA and NAGGL and our members will meet those challenges, as we always have, by working together. So before we get down to the business of dealing with the job before us, we thought it important to pause for just a moment to look back on all that we have weathered together and to celebrate the amazing and enduring SBA-NAGGL partnership. To commemorate that partnership, I am very pleased to present Administrator Mills on behalf of SBA this award recognizing our 25-year partnership together.
Thank you. Thank you.